Yesterday, actually, I was on a podcast interview. I had meetings with multiple personal friends of mine that asked the same question, like, how does the system work? How do you hack business credit? How do you take years of a process, condense it to months? How do you get business credit when it's really fundamentally designed for big companies to get? How does this thing work? Well, that's exactly what I'm decoding this training. I'm going to keep it short and sweet. Today, I'm going to teach you exactly how I managed to hack business credit, how we've been able to build a system that's helped 50,000 business owners do exactly the same thing. And most importantly, how you can do the same thing as well. So, how I hack business credit. Look, first of all, getting business credit is hard. It's hard to get business credit if you don't know the path forward, right? Credit providers often check business credit scores when you're looking for loans, when you're looking for credit lines, when you're looking for credit cards. And the reality is, a lot of these lenders are going to want to look at your personal credit reports and scores if you let them do so, if you don't give them something else to look at. Okay, so that was the problem I ran into. When I first started building business credit, I owned a mortgage company. I personally guaranteed everything. When the business went down because of the mortgage crisis, it took me down personally because I personally guaranteed everything. So my business debtors literally came after the amount of money or the money in my personal bank accounts. The business debt showed on my personal credit reports and therefore ruined my personal credit, removing all the available credit that I have. And the same thing can happen to any of us. We've just got to understand the system to do this. And if we don't, then the problem is lenders and credit issuers continue to rely on our consumer credit instead of actually coming in and relying on commercial credit or business credit as we would like them to. But what I found was a way to actually hack the cycle, to not use personal credit to be able to fund your business. And I remember when I first realized this, it was about 3 a.m. I was sitting at my desk. Enough customers had asked me in the consumer credit world about business credit building, and I decided to dive in and figure it out. And this was a decade plus ago, well before anybody out there, me or anybody else, was even talking about how business credit worked. And what I realized was that it solved so many of the problems that we have as entrepreneurs. The reality is that it's hard for us to get money. In a lot of cases, when we're trying to get money to launch a business, like a friend of mine I just met today, and you don't have good credit, you don't have revenue yet, you don't have collateral, it's really tough for lenders and credit issuers to want to give you money. As a matter of fact, in the early days of helping people with business credit, just out of curiosity, when somebody would come to get money and wouldn't have good credit, wouldn't have collateral, wouldn't have cash flow, I'd ask them, I said, let me ask you something. What would make somebody want to lend money to you? What would you lend money to yourself? And the interesting thing is, somebody even said, no, like I don't have even an explanation, a reason on why somebody would lend me money, because the credit's bad. They don't have any cash flow. They don't have a provable business model. They don't have any assets to offset the lender's risk. So this is something I realized was a real problem, especially recovering from the mortgage crisis when my credit was bad. I had no money in my bank account. I had no assets to service collateral. My cars had been repossessed. My mortgage, my house had been repossessed or foreclosed on. So how do you do this? Well, that's when I realized what business credit was and how to actually hack into the exact same system that the largest companies in this country are using to grow their business, whether it be public or privately owned. So first of all, you've got to remove the unnecessary blockers. And this is where I see people get stuck. Along the way, you'll hear me talk so much about ability, and here's why. Because the vast majority of applications get denied because you don't meet basic requirements that the lenders and credit issuers have. And what was astonishing to me, and still today is so astonishing to me, is that when we fix one little thing for a business owner, we make sure their Secretary of State matches their application. We get them an email address that's linked to their domain and not a Gmail address. We get the phone number listed with 411. These little things take denials and immediately turn them into approvals. And we have case study after case study and testimony after testimony where this exact same thing happens. I got denied for a loan. I fixed one thing, and then I got approved. I got denied for a credit line, a credit card. Then I went out, made these 2 tweaks, and now I have a no limit credit card. And the reason for that is it's because these blockers are unnecessary and what prevent most people from building business credit. So hacking the system and figuring out how to effectively build business credit really comes down to understanding what these blockers are and removing them. So it's like the lenders' computers see exactly the business that they want to see. They see the credibility, the lendability, the fundability that they want to see, where it sets you up to want to give money. And a perfect example of this is, like, if you look at the tale of 2 businesses, One of them looks like they're in a high-rise building in Tampa, Florida. They have a toll-free phone number. They've got an email address that's congruent with their domain. They've got a business license, a merchant account, a business bank account set up. They've got all the makings of a real legitimate business. Then you look at somebody that's using a UPS address. They won't even really tell you where their office is out of. They're using a mobile phone or a home phone as their business phone number. They're using a Gmail email address. They don't have a license. Maybe they have a business bank account. But then again, they don't have anything else that gives them credibility or lendability. And then when you look at these scenarios, you can clearly see why a lender would want to give one business money and why they would be hesitant to give the other. So this is what we found. There's a huge block with being able to get approved for business credit. You've got to build this fundable business foundation. You've got to set your business up the right way. If you do this, so many types of credit and financing become available, especially if you know what lenders are looking for and you know how to actually give them exactly what they're looking for. So by the way, if you're just coming in, tell me where you're coming in from. I always like to give you a shout out and say hello. And I see Admin Washington. So we're actually answering somebody's question right there. Thank you for the business finance suite. You changed my life, man. That's awesome. And this is actually one of our clients right here. You can't make this stuff up. So Admin, thanks for coming in. And those are powerful words, man. That's why I do what I do. And I'm glad to have had an opportunity to be part of your business growth. So tell me where you're tuning in from. I always like to give you a shout out and say hello. So let's talk about Fundable Foundation. I'm not going to spend a bunch of time. I talk about this stuff all the time. So I'm going to skip past this, but just give you the basics, the nitty gritty, get to the chase of how this works. You've got to have separate contact info. It's that simple. SBA, SCORE, Inc., all say the same thing. If you want your business to fund itself, if you want to get business funding, you got to separate yourself from the business. You want to stay away from being a sole proprietor. That means you are the business. You need a separate entity, preferably a corporation. That business needs to have an EIN number. Business credit's built under an EIN number, not a DUNS number. So that EIN number has to be established for you to ever get no personal guarantee business credit. You've also got to make sure that you can get a business license. You don't have to have it, but it gives you a ton of credibility when you're trying to get approved for credit and financing. And you can oftentimes grab one in your industry or grab one in your county for very little money. You need to have a separate business bank account set up. This really is a shocker to me. And I have my personal trainer that he's guilty of this and talking about it, and he's looking for money. And I said, well, do you have a business bank account? He said, nope. Run all the money through my personal. I said, why would you do that, man? You've been in business for years. If you would have just had a business bank account set up, you would immediately be able to get money in 72 hours. That would be so simple to do. So I'm still shocked at how many people are still not running money through a business bank account or running it through a personal. It's super easy, cheap to set up a business bank account. You've got to do so. When you do this 6 months after you've done it, you can get money from PayPal, Square, Stripe. You can get credit lines from Fundbox. You can get all kinds of cash flow financing from places like On Deck and all these cash flow lenders. It's the easiest kind of money you're ever going to get for a business, and you can't get any of it if you don't have a business bank account set up. So you've got to do that. You got to set a professional website, email address. Look, I can come in and for less than $400 actually have a website designer and somebody create the content for the entire website. So if you're writing your own content, it saves you a ton of money. But less than $500 and even as little as $100 to $200, you can have a professional website created. So have a website, have a professional email address. I'm still shocked at how many people solicit me to be able to buy their products and services and are using Gmail email addresses. That's a no-go for me. I won't even work with people that are using Gmail email addresses because you have zero credibility if that's the case. If you can't even get an email that's the same as your domain, which by the way comes free from a lot of providers like places like GoDaddy, then like, what are you doing? Why are you even in business? What kind of perception does that actually set up? Make sure that you avoid a name that puts you into a high-risk industry. Make sure that you know what your NAICS code is. You can easily go to NAICS.com and figure out what your NAICS code is. Figure out what your actual industry code is. And I had this conversation on a podcast yesterday where the host said, hey, I've got credit in my name. Does that automatically make it more difficult for me to get money? And look here, this is how lenders categorize things. You're either not high risk or you're prohibited, which means you're in an industry they won't touch, like porn, for example, or you're in a restricted industry, which just means you face greater underwriter scrutiny. Your rates will be higher. Your term will be shorter. The amount you get approved for is lower, none of which we want. So you've got to make sure that you're not in a high-risk industry, knowing your NAICS code is important. And all you have to do is go to NAICS.com and find the one that's the best fit for you. Then moving forward with the IRS, with the business credit reporting agencies, when you apply for credit financing, you open a bank account. Anybody asks you what industry you're in, you need to say exactly what that is. Okay, I'm an over-the-road trucker, NAICS 55642. I just made that up, but that's exactly what you'd want to put on the application. That way, there's never a confusion about the industry you're in, and somebody can't try to stick you in a high-risk industry that you're actually not in. St. Paul, we got Minnesota in the house, Virginia's in the house, and we've got to say hello to Dallas, Texas is in the house as well. Hey, Matthew, good afternoon, man. Coming in from California. I appreciate that. Dade City, you're right next door to me. Thanks for coming in. Good afternoon, Robert from Houston. I appreciate you coming in and saying hello. And we've got Paul in the house. And Paul, where are you from? Worcester. Thanks for coming in and saying hello. Matthew says, using your expertise, I recently changed my email or professional email and was looked at differently by my business. Yes. And this is so true because, guys, it's not like I'm teaching you some mind-blowing things here. It's common sense. Think about it. If you're going to do business, is it better to have an email info@creditsuite.com or something on Gmail? It just is a whole night and day difference between giving you credibility. Unfortunately, email is not free today with GoDaddy. I know, I actually said that, but it used to be. I love their old system, but still very affordable to set up emails from places like GoDaddy and many other providers as well. And we've got North Richland Hills is in the house as well, and McKinney from Atlanta, Georgia. Thanks for coming in, D'Angelo. I appreciate you all saying hi. Can you shout out? Tell me where you're coming in from. Okay, so again, inconsistencies matter. So if we look at all the reasons why people get denied for credit cards, loans, and credit lines, there's one overwhelming reason that overrides all of them. It is the biggest reason that business owners get denied, and it's called fraud. Lenders and credit issuers think that your application is not legitimate. And what happens is there's all these inconsistencies where you put the information on your application, they go look at Yellow Pages, Yelp, your social media pages, your website, the Secretary of State, anywhere online your business is listed, and they're just not the same. They're inconsistent. So for example, there's a difference between me putting on an application that I'm applying for a loan under Credit Suite and then going to the Secretary of State and seeing that my name is Credit Suite Inc. That sounds like a very minor thing. But in this scenario, the lender's computers can't validate that the application they're looking at is the same that they found online. So you've got to make sure that that information is consistent. If for something as simple as your Secretary of State is wrong in any of those details from your application, then automatically it throws up all kinds of fraud concerns. And the minute you're in that bucket, it's an uphill battle. Lenders and credit issuers don't want to give you money because that gets put into an underwriter's hands, and an underwriter isn't going to trump the computer and say it's not fraud. We'd like to think that the underwriter goes, okay, fraud concern, let me manually go to the Secretary of State. Let me look up these two. Looks to be pretty close. Let me pull up their Facebook page. They don't do that. The bottom line is if the computers show potential fraud concerns because of these inconsistencies, then almost always the underwriter will go with that decision and the application's thrown out. And even worse, they'll never tell you. They'll never tell you it was fraud concerns. They'll never tell you that it wasn't your income, that it wasn't your credit, that you could have easily qualified for that money if like the name on the application match the Secretary of State. So you got to make sure those inconsistencies are fixed. Your utility statements, your bank statements, your social media pages, your main places like Bing, Yelp, Google My Business, they all need to have consistent information. And you can use a service like Yext, Y-E-X-T, or many others that are similar to go look to see where all of your information is incongruent, and then in one place fix it, and it fixes it everywhere online for you. Not everywhere, but a lot of places online for you. So you want to do that to create this consistency. If you have this inconsistency, then this is what gives lenders and credit issuers concern because they think this stuff is actually fraud. Okay, so that's really the problem. So you've got to make sure that it's exactly the same everywhere it is. The next thing you've done is once you've built this fundability, and this is interesting because I just met with a buddy of mine. He said, look, like I'm launching a business and there's some things I just don't know what to do. Like, how do I even get this thing off the ground? I said, step one is develop a business plan. Go to liveplan.com. I love LivePlan. I had this guy on my podcast that actually owns a company I love it. It's a simple, cheap, easy solution to develop a business plan. And the reason I think business plans are important, for the record, is not because SBA is going to ask for them. SBA rarely needs a business plan, but because I find that the practice of writing a business plan helps you understand everything you need to understand to launch the business. You know who your competitors are. You know what kind of revenue you're expecting, what kind of expenses you're expecting, what your projections of revenue will be. You know the customer you serve, the avatar that you may serve. You understand how you're actually going to make money, how you're going to market the products and services. So all the things that you need to basically understand the fundamentals of launching a business, you basically get from a business plan. And I said, after you develop your business plan, the next thing is build the business using the principles of fundability. And what's interesting is then he said, well, let's talk about business credit. I said, I already told you step one. When you get the fundability built, that's the first step. And actually, that really the hardest step of building business credit. Once you have that done, the rest of it's fairly easy if you understand the accounts to apply for, not to self-promote. We make it easy at Credit Suisse just because we list all the accounts that actually report to the bureaus, and you can come in and see all their underwriting guidelines. So you're ever only applying for what you can get approved for. Our tech that will roll out later this year, our newest update, will actually pull your business credit reports into our software, and then it tells you based on what's on your business credit reports what you should apply for next to make it really simple to navigate the process. But even if you're doing this on your own, it's a series of figuring out which accounts you want that you can use and then applying for those accounts in a step-by-step or tiered order. So first, you've got to start with accounts that are like starter vendors. So starter vendors are very unique because they have two things that make them unique. They'll give you credit when you have none. Even if you don't have any credit with Dun & Bradstreet, Equifax, Experian, they'll still issue you credit. And they report the credit to the reporting agencies. That's really rare. Over 90% of trade vendors out there, people that will give you credit, don't report the credit to the reporting agencies. And this is something we run into all the time. We run into business owners that have $1, $3, $5, $10 million businesses that get denied by credit lines. Their credit lines are called due. They can't get auto financing because their business credit's damaged per their lender. And we look at it and they just don't have any credit on there. And they're shocked. They're like, what are you talking about? We actually have all this credit. We pay these people and these people and these people, but none of those people you're paying report. And another question I'm commonly asked is, well, how do you make sure they're reporting? Ask them. I never get a credit card. I never get a credit line. I never get a loan for the business without asking a lender or credit issuer, where do you report? I actually ask them two questions. What credit bureaus do you use to make your underwriting decision? And where do you report the account once I'm approved? Because that information is helpful. Now, again, sometimes you run into people that don't know that information and they scammer around and don't know. And I ask 2 or 3 other people. Sometimes they know exactly. They say, well, we pull TransUnion on the personal side and D&B on the business side, and we report all of your account payment history to Dun & Bradstreet. So they know exactly what it is, but I always ask, where do you report that data to? The next thing is you get these starter vendors. These starter vendors are places like Uline, places like Granger. They'll give you credit when you have none. They report it to the reporting agencies. They'll give you the credit even as a startup business, and those will jumpstart it. Once you have about 5 payment experiences on your business credit reports, then you can continue to move through the tiers of building business credit. Now, keep in mind, a payment experience is the reporting of an account to a reporting agency. So when you actually come in and have an account that reports to D&B, Equifax, and Experian, that counts as 3 payment experiences. So if you only got approved for 2 accounts, but those 2 accounts reported to 3 reporting agencies, you'd have the 5 accounts you need just with those 2 accounts reported. But some accounts only report to Dun & Bradstreet, and in that are Experian or Equifax, and I'll show you exactly what this looks like. So in those cases, you need to have more accounts to be able to get the payment experiences. So that's a big way that I figured out how you can hack the business credit building system, is you can get the accounts you need and navigate through the process faster by getting approved with accounts that report to more reporting agencies. If you're going to get approved for credit, then try to find credit that reports to 2 or 3 reporting agencies, because when you do that, that will expedite the business credit building process. It's one of the hacks that our clients are able to come in and be able to do this process in months and not years. So if you look here, for example, and we look through our business finance suite, we can see, for example, let's just look at Get Sunoco. We can see that Sunoco here reports to D&B and Experian. That's two payment experiences. We can see Speedway's the same. We can see Gimpler's only reports to D&B. We can see here that BP reports to all three. So if we're actually going to be able to get an account between a fuel station, Sunoco, Speedway, or BP, then our best bet would be to go with BP because we get three payment experiences. Our second bet would be, doesn't matter. Sunoco and Speedway report to two. So remember, you can expedite and hack the system just by coming in and getting accounts that report to multiple reporting agencies, way more valuable than this account here that only reports to one reporting agency. So get accounts, get starter vendors, make sure you get the ones that report to the most reporting agencies. That's going to help you hack the system and help you just get faster results. So Sioux Falls, South Dakota's in the house. Hello. Thank you for coming in. Thank you for coming in from San Diego, from New Orleans as well. How do you know if an industry is a high risk on NAICS? Really good question. And all we have to do here is just Google this. So if we come in and go high risk NAICS, we're going to find two different things. First of all, we're going to find a list right here from NAICS of high-risk industries. You're also going to see a really good blog post that we produce that answers all of that question in depth. So you're able to come in here and learn everything about high NAICS codes, what makes them high risk, and you're able to even get videos. Everything that you need in order to be able to determine that is right here. So just a quick Google search will help you come right across that. Never mind, I see, okay, it's mind-blowing. Paul, I appreciate that. How important is a business plan to get credit? It's not important at all. You don't need it. You don't need a business plan to get credit lines, and even loans. Now, a lot of people say you need a business plan to get an SBA loan. We've gotten a lot of SBA loans and never needed a business plan. So I don't advise that you need a business plan to get credit or financing. I'm not saying it won't be helpful. It could be, but I've never seen it be required or needed even to get SBA financing. But if you're starting a business, especially if you're a new entrepreneur, it kind of becomes crucial because all the stuff that you won't think about is in a business plan. So for example, my buddies that I just talked to a couple hours ago that are launching a new business, I said, look, once you kind of get a plan of what you're doing, then start calling your end customer. They're building a transportation company to transport cars. I said, where are you going to get customers? They said, we're going to call these dealerships and get their business. I said, before you spend a dime on this thing, call those guys and ask them, would they do business with you and what's needed to do business with you? I've discovered that little hack in running businesses, that it's better to go find your customers first and then actually create the product and service once you know the customers exist, because it's an uphill battle to create the product, create the service, put all the cost in. Then you find out, oh my gosh, there's nobody to actually receive this service. There's nobody that wants to pay it for me. It's harder to get the customer than I thought. So I think it's a really good idea to be able to have a business plan, to know who your end customer is in mind, and make sure that you actually, those customers want what you have before you even launch a business. But it's absolutely not necessary when it comes to getting credit or financing. And Kimberly says, that's awesome. Thanks for Kimberly. I appreciate you coming in as well. Kayan says, Southern California, already a partner. Congratulations. Thanks for working with us. I'm really excited that you're partnered with us. And our partner program, for those that don't know, is just a way where you can offer business credit financing as a service. We give you all the training, everything you need to be successful in doing. So if you have any questions, all of our phone number is right on the bottom of all of our slides. What determines if you need a cosigner? Really good question. And it just comes down to this. Can you stand on your own? Okay, that means that if your credit's strong enough, if you have enough revenue, if you are strong enough to represent that on your own, you don't need a cosigner. And by the way, same thing's applicable for a guarantor. If you want to know why you need a guarantee, it's very simple. It's because your business can't stand on its own. Once we build the business credit profile, then what happens is your business, the bigger this credit profile gets, the deeper, I call it deeper, but the more trade lines that go on that business credit report actually make it where you need to guarantee less and less and less. And Faith, one of our sales reps on our team, is a long-standing sales rep at Dun & Bradstreet before she came to us and validated this exact point. She said, yeah, without a doubt, the more accounts you put on that credit profile, the less guarantees needed, the less lenders and creditors rely on your personal credit to be able to fund the business. So if we take this to another level and we look at Michael Dell, we know Michael Dell doesn't guarantee Dell's debts, but if we really think about it, why is that? Now, some people may say, well, Dell is Dell, but that's not true. If you look at Dell, Dell has hundreds of trade lines on their business credit reports. They have a vast history over decades of proving that they can borrow money and pay it back as agreed. And that's why lenders and credit issuers are more comfortable lending to Dell, because Dell has tons of proof that they can actually are responsible enough to be able to pay their bills. So the more you build this credit profile, the deeper that profile and score get, the less lenders and credit issuers really need a co-signer, need a guarantor, and the more the business stands on its own. And this is why I say that business credit, it really is the key of business credit, is it helps your business fund itself. And what I mean by your business funding itself is it doesn't need your guarantees. It doesn't need your credit. It doesn't need these other things. Now, full disclosure, if you're getting started, even building business credit, you have 5, 10, 15 accounts, and you go to get an SBA loan, you're still going to need a guarantee. It takes a lot of credit established to ever get away from guarantees on a lot of loans or credit lines. But you can get almost every kind of revolving credit card, auto financing, Visa cards, MasterCards, credit cards at almost every store without guarantees and credit check. And eventually, when the business grows and your credit profile gets bigger and bigger, then it's easier to be able to get away from loans that need co-signers, guarantees as well. Okay, so hopefully that answers your question. So once you get these initial accounts reporting and you've got that fundable foundation built, the next thing you want to do really is you want to continue this process. So we break this down to tiers. It's the simplest way we found to be able to explain business credit building. So if you look at how we do it for our clients, tier 1 are starter vendors. Tier 2 are ones that just with a handful of accounts in your business credit report will actually start to give you credit. Then you actually get these accounts reported, then you move to tier 3, you move to tier 4. So for example, if you look at how we do this for our client, you can see that we're actually telling you, hey, you need to have a certain amount of accounts reporting on your credit reports to even move to the next step. So that's how we found that business credit issuers issue credit, is based on how many accounts you have on your business credit reports. Now, if you just get starter vendors, well, then all these guys open up. Lending Club Bank, US Bank, all these guys start to offer you credit in a lot of cases without a personal guarantee and credit check. Then once you have even more accounts reported, then you can start to move on to tier 3. And then you have 9 trade lines on your business credit report. Then it opens up all of these. Okay. And then when you get to the next tier, the same thing. When you have even more accounts on your business credit reports, then you can move to tier 4. So the only thing that differentiates business credit building and who will give you credits and who won't really comes down to the fact of how many accounts you have on your business credit reports. And this is exactly why it's so important to be able to continue to build business credit, because the more accounts you build, the deeper your business credit profile becomes, and the less and less credit issuers are then relying on your guarantee and your consumer credit to be able to fund the business. The next thing you got to do is you got to keep an eye on your business credit reports. Look, you can go to creditsuite.com/monitoring, and it's $24 a month to monitor all 3 of your credit reports. It's literally the cheapest in the world to monitor all 3 of your business credit reports. Now, the reality is that we made it the cheapest in the world because we want to make sure it's practical for everybody to get these reports and monitor them. If you go to the bureaus, it's $250 to get your reports from the bureaus. That's insane. If you had to spend that, nobody's going to monitor their credit regularly. But it's inexcusable to not monitor your business credit for all 3 reporting agencies when you can get it for $24. That just doesn't even make any sense. You got to keep an eye on your business credit reports. You want to make sure that lenders and credit issuers don't add any ICS codes that aren't accurate, that the information there is up to date and it is true as it actually is. You want to make sure that you see the accounts reporting on your business credit reports so you know when to move to the next tiers of business credit building. It's essential that you do this, and you got to keep in mind, this is publicly accessible information. If I go right now to Dun & Bradstreet to pull a business credit report, if I go to Experian, if I go to Equifax, look at what they're going to ask me here. So let's say go, okay, get the Dun & Bradstreet credit report. Okay, so let's Google this and see what happens here. And we're going to come up and say, okay, here, let's say check your business credit scores and ratings. We're going to click here right here with D&B. This is what's your business credit. And then we're going to come in right here and we're going to look, and it's going to give us products. We're going to say, okay, let's go to whatever it is. These are credit mine. Now, keep in mind, this isn't going to give you actually access to your business credit report. So let's see if I can find a link that actually does give us access to our business credit reports. So let's go right here. So here we go. Request D&B credit intelligence, products of small businesses, Hoover's free. Let's go to this and see what just happens. If we go here, okay, D&B analytics, manage risk, monitor risk monitoring. Can we do any of this stuff? I don't even know. Where we're going for a trial. Okay, let's go to D&B intelligence. Let's see if we can even see how this even works. I don't even know. I'm going into the armpits here of D&B. I can't figure it out. All right, so let's go D&B. I wanted to make this simple, but the bottom line is when you go to D&B Equifax Experian, and let's see Equifax business. Let's just go to Experian. Let's see if Experian's easier. Okay, so here Experian. This is what you typically see. See how easy it is with Experian and how difficult D&B makes it. And no wonder D&B has problems with the FTC. Okay, so if we go to Experian and we're trying to get a business credit report, look at what it says. Hey, what information do what's the company information? And look at the very first thing it asks us here. Do we want to get credit for our company or somebody else? So right away, the first question that the reporting agencies ask when you go through the step of getting business credit reports is, do you want to look at somebody else's business credit or look at your own? And the reason this matters is because your business credit reports are publicly accessible. Anybody can get this data. So the way I look at it is, why would you not want to control your reputation? Insurance companies, suppliers, lenders, credit issuers, anybody that wants your business credit reports, prospects, clients, people that want to buy your business, they can all get that information. So you want to control your business credit reports and monitor what's on there, because it's not just for your sake of getting credit financing. It really comes down to being able to be the reputation that you have out in the public as well. And be patient. Kayan gives probably the best advice that I've seen so far is don't skip steps. Look, this is the problem is entrepreneurs come in and say, hey, I heard Ty speak and I want a Visa card with no guarantee. You can't do that. You've got to go through the steps. In hacking the system and helping 50,000 business owners through it, we've devised a series of steps for a reason, because these are steps that work for every business. You see, you can go to YouTube right now and type in business credit and see all kind of overnight gurus that build business credit, and they got auto financing without a guarantee themselves. And now they're out trying to teach the world how to do the same thing. But the problem is what worked for them, I promise you, will not work for you, because how long you've been in business, what your industry code is. There's so many variables that tie into their success that's different from yours. So we look at 50,000 businesses and we look at all of their progress and break it down into steps that are applicable to every business. But as we say here, as KN says, you just can't skip steps. If you skip steps, that's what will ultimately end up getting you denied. So that's it. That's it. You build your fundability. You get initial startup vendors. You get credit navigating through the tiers. You want hacks. You should only apply for credit you know you're going to get. Understand their underwriting guidelines. It's easy when you work for us. Like, that's right in our system, right? And I'm not trying to self-promote, but this is exactly why we make it easy, because we say, hey, look, if you want a Dell account, here's how you get a Dell account. Here it is. Here's exact underwriting requirements. But the reason that we do this, the reason we give the quick backlink, the reason we say the terms that they'll give you, where they report, is because this is the stuff that makes the process fast. If you don't have it, you're going to have to be a little bit more patient, because this is the stuff that typically delays a lot of business owners. They apply for credit, they get denied. They apply for credit in the wrong order. They don't know what's happening. They waste a month, they waste 2 months, they waste 3 months. They get it denied. Then they don't realize they didn't set up their fundability the right way. They didn't get a toll-free number and a 411 listing and all the things I talk about that are important to fundability. When you skip steps, you get denied. And then what happens is then you have to go back to the start, like chutes and ladders. Like you hit the ladder. You got to go back up to where you were, right? So I don't know if that works. That's one of my daughter's favorite games. I can't remember if it's a chute or the ladder, but all I know is one of those two things sends you back to where you're going, right? Or where you came from. You don't want to do that. You want to always progress, just like entrepreneurship. We want to constantly move forward. The only way you do that is if you applying for accounts you know you're going to get. Apply for accounts that report to multiple reporting agencies as well. They're going to ask for your social. They have to, per 2018 requirements of the government that prevent money laundering where they got to identify you. But never authorize a guarantee or credit check unless you want to authorize a credit check to move faster through the process, which you can do. And one more hack is look into a program called Credit Line Hybrid. Credit Line Hybrid is a great way where if you do have good credit or a guarantor that has one, you can get $10,000 plus individual limit credit lines on your business credit reports, and that expedites business credit building. One more hack, only you get credit you're really going to use. So many people say, what's the minimum amount I need to spend? You shouldn't be asking that question. You should only be getting credit you're really going to use to grow your business, and then spend what you need to spend to grow your business. Because the more you spend on those accounts, the higher the future limits will be. So that means if I use a credit card and I spend $500, well, then the next credit card is going to be approved for $1,000 or $2,000. But if I use the credit card and spend $5,000, then my next credit card is going to be $10,000. So if you want high limit accounts, you've got to get credit you're really going to use, and you need to use that credit. And you must above all else, you got to pay your bills on time or early. That's the key to getting good scores. So remember, Fundable Foundations. Getting counts reporting through starter vendors. Continue to get more tiers of credit as you go. Monitor your business credit reports along the way. And if we can help, all you ever have to do is give us a call. Our number is right here on the next slide, I'll tell you. And you're actually entitled to a free assessment. We'll actually get your business credit reports for free and go over them with you. We'll actually give you fundability advice on what to fix so you have the best chance of getting approved. We'll even do a funding qualification all on a call with us. And by the way, if you got value from this training, then you want to go to creditsuite.com/toolbox. We got a toolbox worth about $400, call it, full of all kinds of assets that can help you succeed. And all you have to do to get them is just share our next live stream. It's that simple. You share our next live stream and you immediately get access to our toolbox worth about $400. And all you have to do to get the details is go to creditsuite.com/toolbox. Did you get value from this training? If you did, hit that like button. Make sure you go to creditsuite.com and subscribe. It takes less than a minute to subscribe on our channels. We've got 1-minute videos on Insta and TikTok. We've got thousands of videos on YouTube, a podcast with 600 episodes, 500,000 downloads, very popular. You can listen on the fly. And you can also get daily tips on places like Facebook, Twitter, but you can get all of it just by going to the top right of the page, creditsuite.com. And Sasalita, California in the house. Thanks for coming in. I appreciate everybody coming in and saying hi, saying hello, telling me where you are. Done is better than perfect is the next place I'll be live. You can easily look it up online. Done is better than perfect. They've got a great event going on in Miami next weekend. So really affordable tickets as well. If you have any kind of interest in seeing me live and learning about a lot of stuff to grow and scale your business, come and join me. It'll be fun. I'll be there for the 3 days. There's a yacht party the Friday night before. Done is better than perfect. Look it up, and maybe I'll get to hang out with you one-on-one in Miami. I'm really looking forward to Derek Harper and that event. And I'm really blessed to have an opportunity to have Derek as a friend and excited to be there presenting. And I will be presenting other places around the country this summer. I'll keep you informed. I think my next stop is Las Vegas. So if you're in this area, in this region, stop down in Miami next week and see us. Don't forget about your free assessment you get just by giving us a call at 877-600-2487. Don't forget to like and subscribe. And I look forward to seeing you on our next training where we talk about more cool ways to get the money you need to